Hey guys, this is Sal and welcome to one more awesome episode of Technical Saturday series. And in this particular episode, we are going to go through one more technical topic which is actually used in order to understand that where the market is going to take retracement and where we can have actually low risk, high reward opportunities so that we can go for long trades as well as short trades. And at this point of time, I'm talking about this one technical, the most simplest technical tool called as Fibonacci. And even you might have heard this particular word or maybe this particular concept as well in school, colleges, when it comes to like basic mathematics and all. So Fibonacci, this particular series is something which is formed by some of the greatest scientists in this world, and you can consider it was researched by them. And along with that, how it is being applicable into trading and how we can actually get some low risk, high reward opportunities and some greatest opportunities in order to trade in the market. That's what we are going to understand further into this particular episode. So make sure you watch this particular video till the end. And first of all, if you're someone who is new to our YouTube channel, welcome to our YouTube channel and even on our Facebook page as well. And Technical Saturday series, this is something where even if you're someone who is completely novice about what is stock market, what is technical analysis, then you can go through every single episode of this particular video series, which we usually post on every Saturday at 5 p.m. Indian Standard Times, so that you can be hands-on with every single technical topic and you can start trading right from the basics, right from even if it's a very small quantity, but starting any of the thing that is important rather than that particular goal. Because even this is one of the concepts which I've learned from my mentors is that it's not about the goal, but it's about the person we become during that particular journey in order to achieve that particular goal. So that's why I have designed this particular series right from the basics, right from you can consider the most simplified manner. And with that, let's begin with what Fibonacci is all about. So as I've already mentioned, this is one of the concepts which you might have also heard in school or college. And even if not, then in this particular video, we are actually going to go through the basics of what Fibonacci and what Fibonacci series is all about. So Fibonacci or Fibonacci series, this is the series of a number which is formed in such a way like this series is formed in one, then comes two, 3, 5, 8, and this series is formed when you add first two numbers, that is 1 plus 1, that becomes 2, 1 plus 2, that becomes 3, 2 plus 3, that becomes 5. This is how this particular series is formed, and even it goes till 144 and beyond that. And main importance of Fibonacci series is used in order to understand the exponential growth. Right now we will be understanding the basic concepts about how it takes retracements and all, but the basic functioning, like the most important concept about Fibonacci is also to understand the exponential growth in any walks of life. So Fibonacci series, this is how it is being formed, and as I've already mentioned, it is obtained by adding the two preceding numbers in the series, that is 1 plus 1, that becomes 2, 1 plus 2, that becomes 3, 2 plus 3 becomes 5, 3 plus 5 becomes 8, and similarly 5 plus 8 becomes 13, and so on. And the quotient of the adjective terms in the series possesses an amazing proportion, that is 1.618 or 0.618, which means now let's take an example from 2. So if you divide 2 by 3, that will become 0.618. And on the other side, if you divide 3 by 2, that becomes 1.618. And similarly, if you divide 3 by 5, that becomes 0.618. And if you divide 5 by 3, that becomes if you divide 5 by 3, that becomes 1.618. And this is how this particular series is being formed, which means if you divide smaller number by bigger number into this particular series, then you will get the quotient of 0.618. And similarly, if you divide the bigger number by the smaller number, that becomes 1.618, and so on. And you have to take two adjacent number, which means like if we take 3 and 5, 5 and 8, 8 and 13, and so on, right? So that's how this basic functioning of Fibonacci is all about. And if like this is the basic of it. So if we divide one alternate number, which means or not one alternate number, but if we divide consecutive numbers, which means if we divide 3 by 5, 5 by 8, 8 by 13, and so on, then we will get the quotient of 0.618. Similarly, if we take the same series, the same Fibonacci series, but if we divide alternate numbers, that is, we divide 3 by 8, 8 by 21, 21 by 55, and so on. And then at that point of time, we will get the quotient of 0.382. And if you add 0.618 and 0.382, that becomes 1. Right. So if you that's the basic mathematics, but let's get back to the point. And if you divide two alternate numbers, which means right now, if you divide 3 by 13, 13 by 55, and similarly if you skip two numbers and then divide the next number, then you will get the quotient of 0.230. Although 0.230, that is like the very negligible one, but usually we follow some of the most important, you can consider most important ratios when it comes to Fibonacci. And even it applies to human being, it applies to animals, it applies to solar system, it applies to, like, you can consider flowers, plants, and everything as well. And if you divide the overall human body as well, then from the navel, from the center, like around our stomach, we have navel. From that point of time, our body is divided into 61%, like 0.61%, and then a 0.382, that becomes one. That becomes one individual. And even if you calculate from nose, we have that ratio where it maintains the equilibrium. Similarly, in the marketplace as well, the main importance of Fibonacci is in terms that it gives us the you can consider the equilibrium, whether that particular uptrend is not going to crash or reversal like that. That is why Fibonacci is used in order to give us retracement and all, so that it maintains the equilibrium of the market, and in such a way, like, the market is not completely going on the upside and it is not even going completely on the downside. And similarly, as I've mentioned about flowers, plants, and then we have animals as well, in every other aspect of life, Fibonacci is applied, and that's what this thing is all about. And important Fibonacci ratios which we have to keep in mind when it comes to trading. So there are four Fibonacci ratios which I've already mentioned: 0.230, then we have 0.382, and 0.5. This is something which we like, if we take 1 divided by 2, like, which we didn't took in the division of it, but if we divide 1 by 2, that becomes 0.5. So that is also one of the most important ratios. And then comes 0.618. That is really most powerful, because if any of the stock, let's consider if it is moving in an uptrend, and if that particular stock gives retracement more than 61%, that is not a retracement, but that is a reversal, or even sometimes it is also called as a crash, which we saw in COVID, or even in dot-com bubble, like in around 2008 as well, and even during Harshal Mehta. That was not a retracement, that was a reversal and a crash as well. So this is how it works like. And main thing which I was about to mention about Fibonacci here itself in terms of retracement, although we are just about to go with the concept, what are the different types of Fibonacci, but main concept about Fibonacci retracement, right now we are going to discuss about retracement itself, is that any of the stock, let's consider ABC stock is moving in an uptrend, the bulls are taking charge. The main function of retracement, like let's consider the ratios itself. If let's consider if we have went from, if the bulls have taken charge from 0 till 100, so if it is giving retracement of 23%, which means 23% territory of bulls has been taken care by bears. Similarly, 0.38%, which means out of 100 rupees, 38% has 38 rupees has already been taken care by bears, which means that becomes slightly even more weaker. And if we go to 61%, which means only the 38%, 38.2%, that is the only stake which bulls have. Right? I'll repeat it again. If let's consider there is a stock and it has moved from 0 till 100, and from that point of time, the bulls have taken charge. At that point of time, from 100% stake of bull, if 23% is taken care by bears, that is okay. But if it is taken 38%, that is also okay, because it is not having much stake as compared to bulls. And similarly, if it is at 50% as well, that is also okay. But when it comes to 61%, that becomes like the overall bigger stake is with bears. It's not with bulls, but it is with bears, and at that point of time, it can also get converted into reversal and sometimes crash as well. So that's what this thing is all about. And there are different types of Fibonacci, like we have Fibonacci retracement, we have projection, time, arc, fans, and as of now, time, arc, and fans, these are the three concepts which are actually advanced. And so far for this particular video series, we are just going to go through retracement and projection. And into this particular video of Technical Saturdays, we are just going to go through the concept of Fibonacci retracement itself. And maybe in next video, we will discuss more about projection. So let's understand about what Fibonacci retracement is all about, because so far we have understood the concept about what is Fibonacci series, how do we get the different, you can consider the different ratios like 0.23, 0.382, then we have 0.5 and 0.618, and so on. So Fibonacci retracement is a counter trend within the main trend, which means in previous videos, we have already seen that when it comes to an uptrend, there is a series of higher tops and higher bottoms, but from that point of time, there is smaller retracement as well. So retracement is a counter trend. It's not in the main trend. It's not in the main trend, but it's in the counter trend or in the opposite trend, whether it is in an uptrend or in a downtrend. Because when it comes to uptrend, the counter trend will be on the downside. Similarly, when the trend is completely on the downside, like a bearish trend, at that point of time, the counter trend will be bullish, right? So that is how it is all about. And similarly, it is measured using Fibonacci ratios less than 1%, less than 1, which is actually we have discussed, like 0.618, 0.5, 0.382, and 0.230. That's what these ratios are all about. Similarly, it uses horizontal lines, that is horizontal lines, in order to indicate support in uptrend and resistance in a downtrend. That's how the main function of retracement is all about, so that we can understand and we can get the support and resistance areas, support in an uptrend, resistance in a downtrend. Support in an uptrend, resistance in a downtrend. At that point of time, we get low risk, high reward opportunities to go for long or for short. When it comes to support, we can go for long. When it comes to resistance, we can go for short. Right. So I hope that you are absolutely clear about this as well. And shallower the retracement, stronger the trend, which means if the retracement comes till, let's consider 0.23 or 0.382 or maximum till 0.5 as well, that depicts stronger the trend. As I've already mentioned, like if the stake of bulls is 100%, from that stake, from that 100% stake, if 23% stake is taken care by bears, which means the bulls are still in charge. Similarly, if they take 38 or like 0.38% as well, 0.382, still bulls are in higher charge. And similarly, when it comes to 50-50, that becomes like 50-50 proportion for bulls as well and bears as well. And when it comes to 61%, 0.618 and all, at that point of time, bears have higher control as compared to bulls. So that is why it is highly mentioned that when the retracement comes till 0.38 or 0.5 maximum, that's what depicts the strong, like the strength of the trend, whether it is in an uptrend or whether it is in a downtrend as well. Which means if it is taking support of 0.382 or 0.5, by taking support of it, that depicts that the uptrend is strong. Similarly, if it is taking resistance in a downtrend, that depicts that the downtrend is strong. Similarly, let's take few examples here. So this is the stock called as Jindal Steel, and this is like a daily time frame where from the base. And to give you a short example of how Fibonacci is applied, so you can take any of the software. At that point of time, you have to go for Fibonacci, and you have to plot two lines. One is the bottom, one is the top. You have to plot only two lines, 2 points. One is the bottom, one is the top. You have to take that particular Fibonacci from the bottom till the top, so that you can get retracement level. Right now, let's consider from 500, that stock went till 600. There's a gap of 100 rupees. There's a move of 100 rupees, which was taken care by bulls, which means from that point of time, 38%, like let's consider from that overall 100 rupees move, 38 rupees move is taken care by bear, which means we still have 61, 62 rupees from the side of bulls. And at that point of time, if we get proper confirmation, like bullish confirmation, it takes proper support. We can apply volume as well. We can apply RSI as well. At that point of time, we can have double, triple confirmation as well. And then we can go for low risk, high reward opportunities. And that's how we get support in terms of uptrend, and similarly resistance in terms of downtrend as well. So here we have one more example. From the bottom till the top, we captured this move in terms of drawing the Fibonacci. Then we got exact 50% retracement, and after proper confirmations, we got the move from almost the zone of 170, 175 till almost, you can consider it went into a consolidation zone as well, but still we got proper move till 210 as well within a span of 1.5 months. And this is the latest example which I took yesterday itself. So at this point of time, we calculated the Fibonacci from the bottom till the top, and it took proper 61% retracement. Now just listen to this carefully. It was a move from almost 325 till 375, 50 rupees move, out of which 61% move, the 61% you can consider control, has been taken care by bears, which means this is not depicting a stronger trend. This is not depicting a stronger trend, because there is also a possibility that if it might have broken down of 61%, then it might have got converted into a reversal and then sometimes crash as well. So that is why first level comes retracement, second comes reversal, and third comes crash. Because what a lot of people mentioned in last few weeks, few months, is that right now market is going to crash and all. It's not a crash, it's a retracement. Sometimes it becomes reversal as well, but not every single time it's going to be crash, right? So that's what this thing is all about. And from almost the zone of 350, we got moved till 380 within a span of 2 days. And even this can continue as well. And even at this point of time, we can apply proper risk management, and we can go for low risk, high reward opportunities for 1:3, 1:5, and so on. Similarly, on the downtrend side, we have like in downtrend, we have to apply Fibonacci, where first we have to point out the top and then bottom. In an uptrend, first we have to point on the bottom and then top. But when it comes to downtrend, first we have to capture bottom and then top. And at that point of time, we get proper retracement level, we get proper resistance. We get proper resistance. Right now, in this example, it has taken 61% retracement, and then from the zone of 2000 till 1600 within a span of almost 1.5 months. Similarly, one more example here, it has taken proper 38% retracement, and within a span of few days, or not even few days, in a span of 2 to 3 days, from 800 till 650 with a huge gap down and all. So that's what this is all about. And similarly, here it has taken 61% retracement and it has taken proper resistance. So when it comes to support, we can go for long trade. When it comes to resistance, we can go for short trade, which is applicable in futures and options. So I hope that all the concepts, all the examples are absolutely clear to you, and you have got immense value and clarity as well. And make sure you watch this particular video multiple times, because you will be able to understand about what is Fibonacci series, what is actually Fibonacci, and what are the different retracement levels as well, what are the different ratios. And make sure this is like a home assignment from my side, that before jumping into the actual video, before jumping into the next video that is going to come up in next week, that is based on Fibonacci projection, make sure you practice and backtest at least 50 to 100 charts. And it's like a mandatory practice for all the members of our community, those who are the members of our paid community, to backtest 100 charts a day as a beginner as well. And then later on, you can backtest 200 charts a day as well. So that's what this practice is all about. And I hope that this particular concept is also clear to you. And a quick update here, that in last 1 week, I was mentioning about some surprises. And the surprise is that we are launching our own podcast show, that is the Achievers Club podcast show, where we are going to bring on a lot of new guests, where they are expert in their own topics. They are not just from trading and investing, but they have achieved a lot of new milestones into their own expertise, into their own topics. And we are going to discuss a lot of new ideas, rather than just focusing on money, on trading and investing and all. We should have holistic success and all. That's what I believe, and that's what I've learned from my mentors as well. So that's how this new initiative is all about. And the first episode has already been recorded. The guests are coming up in consecutive manner. We are recording that, and we are editing in the backend as well. So the editing is also done, but we will start posting that particular podcast series from second week of November month. So make sure you are staying updated for that as well. And first podcast, just to give you a hint, is based on our own personal development, not just about trading, not just about money, but about our own personal development. And we have discussed a lot about our own country of India and how we can be the next bigger difference in this world. That's what we have discussed into this particular podcast, which is going to come up in next week of next week of November month. So make sure you are staying tuned, and looking forward to see you all tomorrow in weekly mastermind session. Till then, live fully, love openly, and make the difference today. I wish you joy and abundance in all you do.